investors are scooping up gold bullion and jewelry following the recent sell-off. What does that tell us?
Well, I think what it tells us is that mums and dads investors, retail investors, often have a better grasp on these things, have a better underlying sense of the underlying economic reality. We've heard and seen all sorts of pronouncements from investment banks and larger institutions about the impending decline in the gold price and the reasons for gold's decline. However, the significant rebound, I think, tells a different story, that gold is indeed a bargain around these sorts of levels, and that mums and dads investors who are out there in the real world have a full and proper understanding of the economic difficulties that are facing them. And I think that's underlined by the fact that gold sales in the US for American Eagle coins are up about 1,000% on where they were during April last year. So the man in the street, I think, has a good idea of where things exactly stand with respect to gold.
China's official PMI data out later this week is likely to confirm a further slowdown in the economy. What would that mean for commodities?
Well, commodities have already seen a reasonable pullback over recent weeks, even recent months, on deteriorating economic data, particularly out of the United States. I think with respect particularly to China, I think the reality is these days, and particularly in the future, is that we're going to have to become accustomed to growth rates between 6% and 7.5%. The days of double-digit Chinese economic growth are well and truly behind us, and those sorts of growth rates really aren't sustainable in the current environment. You have to also remember that China's base has grown significantly over recent years. So a growth rate of between 6 and 7.5% is a tremendous result given that increased economic base. And it's also important to emphasise that Chinese authorities are concentrating more on domestic consumer demand rather than speculative bubbles like we've seen in recent years in the property market. They're looking for sustainable demand, and I think that's very important.
What are you now recommending investors in the commodities complex? Which should they buy and which one should they hold off on for now?
I think the standout buy in the present environment is gold, specifically because of the recent price pullback, a situation where we saw a $200 price fall overnight without any change in the underlying fundamentals for the market. My view on the price pullback was that it was simply related to short selling and short-term technical trading factors, but the fundamental sound reasons for owning gold haven't changed. And from my perspective, the outlook for gold is as positive now as it has been for the last 12 years, certainly from a fundamental standpoint. So I believe the price is going to go higher. I believe we'll see prices consolidating between about $1,450 and $1,550 per ounce before pushing higher to around $1,600 per ounce, which has been its long-term support level over recent times. So I'm very positive on gold, and I think for that reason also having a look at silver. Silver is very much a leverage play. We've seen a lot of buying out of the US, particularly for silver. Silver and gold demand is up very, very strongly compared to where it was this time last year. So investors are snapping up bargains, and I believe gold and silver are at bargain price levels right now.